Hello. What's going on, everybody? Welcome to a capital hungry New York market analysis stream and trading session. How's everybody doing this morning? Can I get an audio and visual check within the YouTube audience? Please make sure you guys do me a favor and read through the YouTube description before we start and jump into it. So good morning, good evening, good night to everybody, depending where you are in the world. We're going to be doing some analysis and trade ideas for scalping trade ideas through the New York trading session on gold, GBP Jpy, GBP Usd, Euro USD, USD CAD, as well as US 30 stock market index. We're also looking at economic events. And any market sentiment impact and current fundamentals at play, of course, as well. Yeah, I'm just giving a second for people to get in here, make sure all the sound and everything's good. Okay, perfect. So, just some stream reminders before we jump into it. This is not direct financial advice, but after I go through the process of giving analysis across the various pairs, please feel free to ask questions about technicals, fundamentals, and overall financial markets, but avoid asking for direct signals. The Capital Hungry free news Twitter, as well as the free Telegram analysis channel, and this YouTube itself is filled with tons and tons of resources for you to use to upgrade your trading, whether it be on fundamentals, technicals, trading psychology, news, and much more. All of these resource links are obviously on the stream reminders layout, on the YouTube layout, and within the YouTube description. Now remember, as we trade the financial markets, we are all manual retail traders. None of us are institutional traders. We don't work for a bank. What we do use is all the information that we have available from various charts to news platforms to fundamentals, bring this information together to analyze the markets and create some potential trade ideas to execute on. But you have to understand, as manual retail traders, we are always going to have emotions at play and various other factors impacting our decision-making process. The best way to avoid crashing your account and the best way to avoid any emotional decision making is to first have a trading plan, follow that trading plan, follow your risk management plan, focus on the long-term vision, and this is the best way to keep emotions out and avoid crashing your account. So some key recent macro fundamental points that we need to focus on as well here. That was from last week. Okay, so some key macro fundamental points. We're noticing that our global stock markets are in a pullback from their highs, as well as our safe haven currencies, US dollar and Japanese yen, are in a very tight intraday range. This also hand in hand with global inflation rising, as well as the risks from the Delta and MU variant COVID strain, are putting a little bit of strain on the markets just in the very short-term periods where we're having very aggressive pullbacks on some of our risk currency against safe haven pairs. For example, like you saw with GJ yesterday, we're going to be discussing that, right? And we've seen a decline in pullback on our global equity markets as well. Overall, markets are still very optimistic, and we're still holding that macro optimism in terms of global stock markets still being in bullish structure, GJ still being bullish in the higher time frames, and our other risk currency against safe haven pairs still being bullish in the higher time frames. But we are scalpers and intraday traders here, so we have to understand and play the market waves accordingly. And we have been noticing, of course, the equity markets in a little bit of a pullback, dollar and Japanese yen, safe haven currency in a range, volatility index holding some short-term strength as well, and some global inflation still rising with the yearly US inflation still high, as well as UK consumer inflation still showing us increases last night as well with that economic data that came out. In terms of economic events, overnight at 2 a.m. Eastern, we already had the UK CPI, which is some more UK inflation figures that obviously showed us inflation still rising around the world. At 8:30 a.m. Eastern, we have Canada's core CPI, which impacts the Canadian dollar month-over-month data, followed by at 10:30 a.m. Eastern, US crude oil inventories reporting. We're probably just going to be focusing on the CAD CPI just to give us more information about global inflation figures and how that is sitting. And then at Asian session, we have at 6:45 p.m. Eastern, New Zealand's GDP, and then at 9:30 p.m. Eastern, Australia's employment change. Okay. Now, we can see across the board here that our global equity markets have been doing a little bit of a decline just from their all-time highs, but it's nothing that's causing a crash or panic in the markets. For example, we're still bullish across the board when you look at the higher time frame structure of our global equity markets. At the same time, the volatility index had a little bit of a bounce, as well as the dollar had a bounce and Japanese yen had a bounce. It still didn't break bearish market structure retest points for the time being. And we're still on, when you zoom out and look at the US dollar movement, Japanese yen movement, and volatility index movement, we are still very bearish on our safe haven currency as well as volatility index. So we want to play that accordingly and understand, yes, we had a very aggressive pullback on GBP JPY, but the higher time frames are still bullish. So if we notice any type of support or order block being formed at potentially 150.8 or 151, if we break back above 151 and Japanese yen fails to break these price points stand alone when it opens up shortly, like Japanese yen just pushes up a bit and then ends up turning more bearish, dollar breaks this low and turns more bearish, volatility index turns bearish, and UK and global equities continue back bullish, then we will be jumping back into our GBP JPY buy bias and playing that accordingly, with also looking for buys on GU, Euro USD, US 30, and gold, and only sells on USD CAD if we notice this pathway of price with the dollar potentially going to revisit these lows, respecting bearish market structure and failing to break these bearish market structure retest points. If Japanese yen goes back to revisit its range lows and volatility index turns bearish, as well as equities continue hot. Now, let's start off with some analysis here on gold. What we can identify and what we can see is, if you guys followed the Monday, who here watched the Monday market analysis stream, whoever's in the YouTube chat or from the private stream, just so I can get a show of hands of who watched that at least. Okay, so if you guys watched that, you would understand we were in a gold bias and why we were in a gold bias. So on the intraday time frames, gold, as inflation is still rising around the world, still ended up holding this liquidity zone to the left, with having this impulsive move to the downside to grab liquidity from that 1781 key price point you can see to the left. And then with yearly inflation still heavily rising in the US economic side, and we understand that investors hedge inflation risks by pooling into gold, we had a very strong upside move with the potential now to continue further bullish through this New York trading session after we break out of this minor corrective structure we are seeing here. So we're gonna be pretty much continuing to look for gold buys, but just adapting to the current time frames and price points of interest. So what I can see is, after we had these very aggressive impulsive moves where from the low peak of 1781 we went all the way to a high of almost 1808, after this intraday high was printed, we've been in a slower corrective pullback stage. Okay, so what I'm essentially going to be looking for through our New York trading session, as volume comes in at 8 a.m. Eastern and also 8:30 a.m. Eastern, is buys in these areas, but dependent on price action. If we get a retest of the previous candle body highs, which is marked out in this gray zone, and a very strong zone where we had this bounce during Asian session, and we failed to break again, I'm still looking for buys at around 1799 and 1800. I'm also looking for buys at 1795, and the safest buys above 1803 break and retest and above 1808. So as long as US dollar continues relatively bearish, Canada still shows us that with their CPI figures, inflation is still increasing. We fail to break these price sensitivity areas. I'm looking for buys in this area. If we break below 1800, I still wouldn't sell it, but I would still be looking for deeper retest pullback buys at 1795. Compared to this impulsive move here that we had from these lows, even if we were to get a deeper correction down to 1795, this would still be roughly a 50% correction in pullback in relation to the impulsive move in buyers we had jump in from these lows. Alongside that, the price action of this pullback structure you can see here is also a lot more slower and very corrective in terms of taking countless hours to have this pullback take place and set up potential better risk versus reward buys, compared to this very aggressive impulsive move that you saw here where we picked up strength so aggressively. Okay, so if we don't break above 1803, we get a deeper pullback to 1799s. I'm still looking for buys from that area. If we break and retest above 1803, break above 1808, even if we get a deeper pullback to 1795, I'm still only looking for gold buys in these areas. I would only be looking for sells at 1795 as a decision point. We'd be breaking back below these price sensitivity areas to the left. We'd be doing deeper drops compared to the 50% correction point. And I would need US dollar strength through the New York trading session to really take advantage of the sells below 1795. Otherwise, I'm primarily in a bullish bias on gold, with the entry points marked out in the green boxes, and the reasoning stated that 1, the higher time frame market structure is still bullish on gold. 2, it's still being traded against the dollar, where the dollar correlation has been very strong, and so far when I showed you guys the dollar chart, dollar index is still bearish. We just needed to come back down to those lows. 3, global inflation figures are still rising, which is a bullish fundamental confirmed for gold as investors hedge inflation risks by pooling into gold. And the price action as well as buyers versus sellers strength. Okay? Now, GBP JPY is in a very tricky situation here because we had a monstrous pullback from these intraday highs being printed. But let me show you guys GJ runs on the daily time frame, that we don't want to start shifting our bias just after this one bearish daily candle or a couple of bearish daily candles. So here we're on gold on the here we're on GJ on the higher time frame, right? You can see all GJ has been doing on the higher time frame is pushing up bullish, having pullback phases, consolidation zone breakouts, pullback phases, upside moves, and continuations to the upside, right? We've only had GJ bullish ever since the Japanese yen has been extremely bearish. But you have to understand, when you're looking at the behavior of a pair like GBP JPY, it is not out of the ordinary to see a couple of days worth of pullbacks that still doesn't end up breaking the overall market structure. So you can see this demand zone on GJ and higher time frame support area at 149 hasn't broken since March. And from this area, we extended into these highs printed by buyers, but we failed to break this very significant price point. From this price point, we've had very strong upside bullish runs before. Here, 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 and now potentially here. You can see through these bullish runs, it's not out of the ordinary to get some potential aggressive pullbacks or days of consolidation and bearish candles within the mix. For example, even this aggressive pullback still didn't break overall market structure and buyers jump back in. Here, off this bounce, you have very strong bullish price action. You have a few days worth of pullback in bearish candles, but it still doesn't break market structure and buyers jump back in. Here, very strong price action, bullish candles, and buyers jumping in, printing intraday highs. And now we're in a bit of a pullback phase here, okay? Unless GJ cleanly breaks below 150.800, which is roughly here, then I'll expect a break of structure and potential deeper sells to take advantage of back down to the lows. But unless that happens, I'm still in a buyer bias on GJ. What we had happen was a very aggressive pullback, but it didn't break higher time frame structure. UK equity markets are still relatively bullish, and the Japanese yen is still relatively bearish. So it's not out of the ordinary that when you're seeing some of these bullish runs from these low points, even when you're seeing this pullback, for example, it's not out of the ordinary to get a couple of daily candles that do these very aggressive pullbacks, but still don't end up breaking overall bullish market structure. And we continue right back to the upside, right? So yes, we had some strong bearish daily candles here, but on the 4-hour time frame, my last make or break price point area is roughly around this liquidity zone at 0.800 here. When I'm talking and looking at the daily time frame as well. This is the last price point area at 0.800 and 0.500 that I would need to have clean breaks below to show me to take sells back down to those lows in higher time frame demand area. Because when you zoom out and look at these bullish runs again, this pullback we're seeing here, if we start to create a bit of a floor and a bit of a support, it's very similar to when we had this upside run, and this aggressive pullback. You can see this aggressive pullback, it still came from an intraday high being printed, right? Very strong pullback where you're in a pullback for almost 2 to 3 days. You come down to that key price sensitivity area and you still fail to break, with buyers jumping back in to take us back to those highs before we really show exhaustion by buyers and come back to the downside. Okay? So with that being said, it's going to be very important on how this hourly candle also closes and what it shows us about price action and momentum. Something else we can see is that this bearish market structure is still also being respected from these high points and sell-off area, which was the 0.800 PPL. So what I'm looking for on GJ, to keep it very clean cut, very simple, okay? If Japanese yen continues bearish and UK equity markets pick up strength and we create a support at 151 here, I'm going to be looking for buys from 151.200 to 151.5. Okay? I'm only going to be selling GJ if we continue to respect this bearish structure, have stronger continued sellers price action, and cleanly break below 150.800, and we can identify Japanese yen breaking above that intraday range, as well as equity markets still being relatively bearish. Otherwise, I still see the potential that if we create a support here, equity markets continue back bullish. Like for example, again, UK equity markets might be having a bit of a decline, but it's just a pullback from all-time highs reacting to those previous lows, right? If these dips on the equity markets start to get bought up through the New York session, VIX fades out that strength, Japanese yen doesn't break above the range and starts to continue back bearish, as well as dollar continues bearish, it still shows us that markets are optimistic, and I'm only going to be taking the buys then above 151.200, because then I'll validate a support being created. I'll validate coming back above this minor intraday low, as well as the 0.200 PPL, potentially breaking above that bearish structure and taking the buys from 0.200 to 0.500. Okay? I would only sell if we break below 0.800 with the target being the next PPL down. But right now we haven't really had the confirms for that just yet, obviously, and we do want to watch how we start to react around this 151 flat price point and how this hourly candle ends up closing and how New York opens. So if I see that New York session open does something like this, makes a lower wick, comes back above 151, then above 151.200, alongside UK equity markets rebounding and Japanese yen being bearish, then I'll take the buys. I'm only taking the sells if we have clean breaks below 150.8. All right, so that's gold analysis so far and what I'm looking for on gold through the next hour and a half. And that's also the GJ analysis of what I'll be looking at on GJ. We're just going to keep it on the lower time frame. Right now, price action is looking very bearish and looking like we will be dropping a bit further. But I just want to wait to see how New York session opens up and what price points we're reacting to. And we're still going to be playing. We're still going to be playing this structure for the time being. Sells below 0.800, only buys above 0.200 there. Okay. All right, GBP USD. So all of our dollar pairs, because we understand how dominant the US dollar has been and the correlation regarding everything trading against the dollar, the same time the dollar has been in this consolidation zone and ranging between 92.8 and roughly 92.4, is the same time we've seen pairs like UCAD in a heavy range, as well as obviously GBP USD in a range as well. Okay, so on GBP USD, I'm still in a buyer bias. Just we need to validate US dollar weakness, and I'm taking buys above 384 and above the previous highs at 389. This is as long as US dollar continues bearish through New York session. All right, I would only be selling GBP USD if we break below higher time frame key level in the market structure retest point below 1.378. That's the only way I would be selling GBP USD is below 1.37800. If you guys go and reference the previous market update webinar, and we also look at the higher time frames here on GBP USD, it's going to be very similar to GJ, right? Where the higher time frames are still extremely bullish with buyers only printing highs, but we've been stuck in this consolidation zone for a period of months, but still never broke below these significant price points on the higher time frame and get very aggressive buy bounces from these areas as well, right? So US dollar still fundamentally and technically bearish on the higher time frames. GU has a very strong demand zone at 1.36, and even though we've had some sporadic price action on the intraday time frames, we're still having bullish market structure being respected with higher lows and higher highs being printed for the time being. We haven't broken that structure yet, even though we're getting some messier price action on the intraday time frames. So I'm still sticking to that primary bullish bias when I come here and look at these intraday time frames with buys above this medium term gray zone at 1.384 and also buys above 1.389. As long as US dollar continues bearish through the New York trading session, we can validate UK equities having strength and technical breaks above these price points shown. I'm looking for buys in these areas. I would only be looking for GBP USD sells if we break the intraday bullish market structure and also come below 1.37800. Okay, so main bias on the higher time frames on GJ, GU, Euro USD, and gold is still buys. It's still bullish with those price points given, right? But as as I told you guys in the fundamental points, we are seeing that market sentiment has just been shifting in the intraday time frames, as dollar and Japanese yen have been ranging standalone. When you look at the dollar index and Japanese yen, we know global inflation risks are rising, and we know equity markets have been in a pullback from their highs. So if that risk off sentiment still continues, meaning US dollar and Japanese yen hold strength through the New York trading session, then we will adapt accordingly with the GJ sells and GU sells, but at the price points of interest given, not just at some random areas. Okay? So GJ sells would only be below 150.8, GU sells would be below 1.378, gold sells would only be below 1795 so far to recap. Otherwise, our main bias is looking for the buys. The GU buys in the area stated, the GJ buys if we come above 151.200, and gold buys above 1803, or if we get the 1800 retest and continuation back to the upside. So we still have 17 minutes until the actual New York session opens up here. And let's go to Euro USD now. Same idea, you're going to see a similar pattern. Higher time frames are still extremely bullish, right? Let's just go quickly to the daily time frame here. Going to be very, very similar structure to GBP USD, because you have a risk currency against a safe haven currency, and we know how dominant the US dollar correlations have been. So Euro USD is the exact same. You have this higher time frame demand zone at 1.17 that has overall failed to break since that August period. From these price points that have failed to break, we have buyers jump back into the market and have some very decent bull runs from these price points of interest, right? So the shitty thing is that we're getting a bit of a decline here in terms of aggressive and consecutive bearish candles here on the daily time frame, but we're still maintaining that bullish market structure, as this pullback came from an intraday high being printed, and we're starting to create a support at 1.8 flat. We're still respecting that higher time frame demand zone and creating that bullish market structure. So of course, Euro USD main bias is still bullish. I'm looking for buys on Euro USD with a decision point being at 1.805. This is a decision point in make or break area, meaning if we hold above this zone still on the daily time frame, we're still looking for buys in this area. Also, we're looking for buys if we break above these rejection points and higher time frame key level 1.8400. As long as equities start to pick up strength, we break above these price points technically, I'm still looking for buys on Euro USD. I would only be looking for sells if we have clean candle closures below 1.18 flat, or if we break below 1.177. It's just that we have to understand, as we're coming towards the end of a quarterly period, as we have dollar in a range, Japanese yen in a range, as we have equity markets doing a pullback from highs, as we're having some short-term fear regarding inflation risks, that a lot of our risk currency against safe haven pairs have been having messier price action and much more aggressive intraday whipsaws and ranging. We have some great intraday moves play out. For example, like these buys that I'm looking for here are the exact same buys that we took advantage of that was given in the Monday market update webinar, as well as the Capital Hungry private channel, but they're very short-lived because we know that the dominating factor in any pair with the dollar has been the dollar movement itself. And we can see that dollar has been in this very tight, aggressive range for an extended period of time now over the last week or two, and Japanese yen has also been in this very tight range as well. What I'm hoping for today is that the dollar still continues to respect the bearish structure, break below 92.4 and make our way back down to 92, and we can play those buys on GU, Euro USD. We can play sells on UCAD and play the buys on gold and take advantage of that accordingly. All right, now USD CAD. USD CAD, we're not fighting in this range. Way too aggressive whipsawing, way too aggressive in messy price action. We're not going to touch this range and consolidation zone here. We're not going to stress out with that, especially as we're scalping and you can get very aggressive wicks. You can get very aggressive up and down whip-siding moves here because the dollar's been in a range and USD CAD is the most heavily influenced pair by the dollar. Not just because US dollar is the primary in the quote, but also because the Canadian dollar is heavily influenced by the price of oil. And oil has been moving against dollar. Okay? So anytime you have any one-sided US dollar strength, it also probably means Canadian dollar weakness, because if dollar is very strong, there's a higher probability oil is going to be a bit more bearish in the short term. But with what we have seen, oil's still sitting at $70 a barrel and dollar's just been in a range. So on USD CAD, it creates this very tight zone that we have been in. I'm only taking buys if we break out above the range, roughly at 272. And I'm only taking sells on USD CAD if we break below the range at 258, and we have the Canada economic data at obviously 8:30 a.m. Eastern as well. We have to focus on and keep an eye on there as well. Okay. Last but not least, before I just gotta go to the washroom here because I just woke up in the morning prior to this, is US 30. Now, we understand that US 30 has been in this pullback stage from highs, but this isn't a crash, this isn't a crisis. It's just that every time you have a high printed, you do get these aggressive pullbacks as buyers take profit from these high points, and it creates these potential pullbacks and dips as the buyers take profit, sellers jump in hand. And then, of course, we take advantage of the buy bounce and collecting those dips and continuing back bullish. There's no point fighting the Federal Reserve. Stimulus is still staying active. Any of the sells that have happened on US 30, I've never taken advantage of the sells. I just let the sells happen and then take advantage of the potential buy dips back to the upside. And that's what I'm essentially looking for to identify here. You can see with any of the dips that come from a high, you can also identify pullback bearish corrective structure that gets created, right? Or whether it's a consolidation zone and a breakout in that sense. Okay? You can see here from a high, you identify the pullback structure. That's all I'm doing here. From the high, we're still respecting that pullback structure. The safest buys is once you identify the bottom and support, then you have the high risk, high reward buys. Right? With the safer buys being a breakout of that bearish market structure to go back to revisit the high points. So pretty much I'm looking to see where we can create a bottom on US 30, how far the dip is going to extend, because this dip could still come down and extend a bit deeper to revisit these lows at 34K and still be respecting some of this pullback structure from these high points. I'm not going to sell it from this low. I'm not going to sell it from this area. But what I would be doing is looking for buys at the dips, then break out of the structure buys and scaling up accordingly. Just like we've seen that this pair has only been the US stock market index and the various US stock market indexes have only been trending bullish. We've only had highs printed, pullbacks from highs, and continuations to the upside. And I haven't been taking advantage of the sells. I identify the sells that take place and take advantage of the potential buys that set up afterwards. So if we're looking at like a situation like this, when you have a pullback from a high, or like from here where you had a pullback from a high, the higher risk buys is once you identify the support on the intraday time frames. That's high risk, high reward. The safer buys is once you break out of that corrective structure and target back up to the all-time highs and potentially new highs as well. Okay? So with US 30 here, we can see that we're creating a little bit of a support at around 31K, but we're still respecting this pullback structure like I was showing you guys from the highs. So I'm only looking for buys in 2 and 3 areas. One, if we come back above this previous low at 34,600, high risk, high reward buys. Safer buys being above 35K, safest buys being above 35,200. Otherwise, if we break below 35.5, you guys can sell this down, as we can expect deeper pullbacks in liquidity grabs to take us down to this previous low for better risk versus reward buys there. So if we fail to break 34,500, come back above 34,600 buys, 35K buys, 35,200 buys. If we break below here, anticipate deeper pullback sells and then better risk versus reward buys from this previous low to the left. All right. Okay, so now that the analysis has been given across gold, GJ, GBP Usd, Euro USD, USD CAD, as well as US 30. We also identified and looked at what key fundamental points we are focusing on. Something I forgot to include there is how we are coming towards an end of a quarterly period. Obviously, this makes more sense as equity markets are doing that pullback from the highs. We have to still keep in mind that we've had some very strong intraday ranging on yen and dollar pairs, primarily because when we look at the dollar index or Japanese yen, they have been in that range themselves. Global inflation is still rising across the board. We do have some COVID risks with Delta and MU variant. So these factors hand in hand are causing this short-term change in risk sentiment, with having more of a risk-off environment and equity markets doing a pullback and drop, and obviously dollar and yen holding more strength. But we still have macro optimism in control. So that's why those various trade ideas have been given, but only adapting to the sells on gold, GJ, GU, Euro USD, and US 30 if we get those confirms laid out. Okay? As per economic events, we already had the UK inflation figure at 2 a.m. Eastern, and now we have Canada's core CPI at 8:30 a.m. Eastern, 30 minutes roughly after the New York Open. Then we have crude oil inventories reporting at 10:30 a.m. Eastern. I just woke up right before this stream, so we're just going to keep the chart on gold for now. Give me 5 minutes to go to the washroom as we're waiting for New York Open. And then I'm going to do analysis on any other pairs or charts that you guys send and want me to look at, okay? So if you guys missed the gold, GJ, or analysis on any pairs that I already went through, don't fear. Through this 5-10 minutes as we're waiting for New York Open, just rewind the stream and go watch the analysis I gave. Okay? Ash, leave me the fuck alone, bro. You know I'm in a stream. I don't know why you're sending me voice notes right now. No, I just woke up right before this. Usually the New York sessions within the Capital Hungry private channel, we do at NYSE. 9 a.m. Eastern we start. Then we watch NYSE Open. And then we go until London close. So after I'm done this YouTube stream from like 7 till 9, then we're gonna go do a private session stream with our chat. You know what I mean? So yeah, go watch the different trade ideas given. Just give me 5 minutes to go to the washroom here. That was the freaking layout. Be right back. All right. Okay, so gold is opening up bullish so far, but we do not have any lower wick created on this initial market open candle here. So I would like some type of lower wick created or these lows tested. So I don't want to start jumping in buys just yet. That's a bit iffy for me. It seems like we could still grab liquidity at 17.99. Does your guys' broker have any lower wick on your hourly candle New York open, or is it just me? Mine has no lower wick at all. It just started pushing up right away. So no, like we can't enter gold buys that quick. We don't have enough confirms there, okay? GJ still has the potential to dig a bit deeper. It's still respecting this corrective structure. We're only selling GJ if we break below 0.800, and we're only buying above 151.200. So we can see right now we're just ranging at the level created so far. What I'm going to be essentially looking for is if we create an order block, and which side of the order block we end up breaking out to the upside, or if we break lower here, okay? So actually, in terms of GJ scalps, you don't actually have to sell GJ at 0.800. You can actually sell below 150.92 if we have enough sellers pressure to take it down to 0.800. But the buys are still going to be above 155, all right? Yeah, let's not rush this. It does look like we can have the potential, if we come a bit lower here, to get a liquidity grab first. And this is just New York session opening up, so no rush. Yours has one. You guys, some of you guys have a lower wick already. Mine didn't create one at all on my broker or on my feed. So I think we're gonna still create that potential lower wick. And GJ does look like the seller's pressure can continue a bit deeper. We can see Japanese yen is opening up bullish and going to retest those intraday highs I'm talking about here. We're only going to sell GJ though if we come below 150.95 and safer below 150.800. Over 12 million in cash, gold, and gold bricks seized from Afghanistan bank. God damn. Our main bias, I'm still want GJ buys, but that's only going to be if we break above this bearish market structure on the lower time frame. If we break above that, even here you can see this being respected very cleanly, right? But if we break above that on the intraday time frames here, I'll show you guys. You can see this bearish market structure from the highs being respected very strongly here, right? That led from this last higher low point going into the lows. So we're only taking buys on GJ if we break above the structure at 0.200. I'll call out any trades. Right now, when I'm looking at the 1 minute price action, what I'd like to see and identify is buyers versus sellers strength, right? For example, when you're looking at the price action movement on the lower time frame here, and as we've had these drops, you can see that you have these pullbacks to retest a lower high, and then you have very strong bearish price action. You only have minor bullish pullbacks that don't break the overall structure, and stronger consecutive bearish price action. What I mean by that is you have stronger bearish candles, more consecutive bearish candles, and then just these little minor pullbacks and blips. So what we could have generating here is pretty much just a liquidity zone. And as we're still respecting this current bearish market structure, as well as Japanese yen strength, if we break below these 1 minute lows, very similar to like here. See how here you're starting to create a bit of a support and consolidate, but you don't break out of the bullish, you don't break out of the bearish market structure, sorry, you don't break out of it. You don't break that last low point on the lower time frame. Instead, you start to create a bit of a support, you consolidate, but as GBP is still having that weakness and yen is strong, once you break down to the lows, you extend that move down. So here we're having a similar situation where if we consolidate and don't break the bearish structure and shift out of that, once we break these lows, GJ will have a drop down to 150.800, and we can adapt to sells below 150.94 and look for something very similar to this and this. Do you understand? You can see that similarly here as well, where here you had a bit more of a pullback phase. So here you have a bit of a consolidation and support being created, right? You actually get your pullback to retest the bullish market structure, but then you come right back down to these lows and dig even deeper here. Then you have another consolidation zone being created. You break to the lows of that zone on the 1 minute and dig even deeper. Now we have very similar situation where we're having a consolidation zone and liquidity zone being created. And once we can validate a break below the 1 minute lows here, or like we did here, we can adapt to the scalp sells from about 0.92 down to 150.800. I can only safely take some buys if we come above 151.200, because what this shows me in terms of price action and buyers and seller strength is two things. Right now, we're seeing higher potential that bearish structure is still being respected, bearish price action still being respected. But this is what I would need to see in terms of the chain of events. Failing to break those lows that are being created, having a liquidity zone and consolidation and breaking to the highs of the liquidity zone, then breaking and retesting above 0.200. This shows me multiple things in terms of price action reading. Number one, it shows me that sellers are exhausting and Xing out of the market, and there's not enough sellers order flow to break lower. That's number one. Number two, once you break above the order block high, that shows me buyers are jumping in and we're seeing buyers momentum start to develop. Number three, when you break above 151.200, that shows me we're breaking that bearish corrective structure, and we're also coming back above these previous low points to the left and 151.200 PPL. That's number three. Number four to validate with this fundamentally is Japanese yen weakness, as well as UK equity markets being bullish. Do you understand? This is the chain of events and pathway of price I would need to take buys above 0.200, but I just want to break down to all of you what that tells me about price action, or sorry, what price action tells me about order flow. But if we see that we just consolidate here and break these lows, that just shows me sellers are still in control. This was just more sellers entering the market. Bearish market structure still being respected. Japanese yen is holding strength. And then we take that squeeze down like the break of these lows and the break of these prior lows as well. I would only see sellers exiting the market if we fail to break these lows, which shows me there's not enough sellers order flow to break lower. We break above these 1 minute candle bodies, which shows me more buyers momentum is jumping in. We break above the previous lows created to the left, as well as bearish market structure. And then we take the buys from 0.200 up. Does that make sense to everybody of why I would take buys from 0.200, what that is showing me in terms of price action and buyers and seller strength, and how I would safely develop the confirms to have confidence in taking those buys? Any questions about that? Right now, we have not seen that shift in structure. We have not seen that exhaustion by sellers. What we have seen is very strong and consecutive bearish price action. And then we see some minor consolidation zones being created. For example, here we had a consolidation zone. Here we had a pullback phase. And here we're having a consolidation zone being created. None of the reason why I'm trying to explain this is because sometimes when a consolidation zone is being created, technical only traders will say, hey, that's a support. Let's start jumping in buys. But you don't have the validation to extend these buys. For example, let's look at this, okay? Let's say you want to take buys at 0.200. That's perfectly fine. You're failing to break 0.200 multiple times. That's step number one. That's showing you sellers are exhausting out of the market. You start to take your buys and you have your buyers jump in, and buyers momentum pretty much go to retest this bearish market structure point and 151.5, but not break above this order block price sensitivity area or correct the downside impulsive move. So you don't have any validation to further extend your buys. What this was a pullback to retest this and get more sellers in and extend into deeper lows. You would only have further reasoning to take extended buys here if you had a break above these rejection points, break above the bearish market structure, and then a retest failing to break lower, showing more buyers momentum and Japanese yen weakness. We have not had that happen yet. We've only had this drop, pullback, drop, consolidation zone, drop, consolidation zone now that we're going to be watching accordingly. GJ could also even do something like where it could spike up to 0.200, still fail to break, and do something very similar to here. So 0.200 is actually going to be, now that I'm zooming out and looking at it, 0.200 is actually going to be a lower time frame decision point for us, okay? So I actually see multiple sell areas zooming out now, better looking at that price action. We're going to mark off this consolidation zone, that's fine. The safe impulsive sells are if we just continue the seller's pressure, break below these lows, target 0.800. But if we get a bit of buyer's momentum and fail to break these lows and then end up breaking above here and getting a deeper pullback, okay, 0.200 is going to be a decision point. Breaks below 0.200 are still going to be a sell area because we're still retesting those previous lows and failing to break. We're still retesting bearish market structure and failing to break. I'd want to see like an order block or rejections like this being created at 0.200. And then if we rejected 0.200 and come back below, same sell area here as well. Only buys on GJ if we cleanly break above this previous price sensitivity areas, have Japanese yen weakness, and a break above 151.2. Otherwise, I see that we could come below and break these lows and have an impulsive sell-off. Or if we do get a deeper pullback, we could still reject 0.200, get more sellers in, and have a sell-off in that fashion as well. We can only safely take buys if we come to a higher time frame demand zone, like maybe 150.800 if we come here and reject, or if we come above 0.200. Does that make sense for everybody? And does that make sense in terms of what the price action reading in terms of the movement, lower lows being created, or the market structure, the buyers and sellers strength, and what that tells me about order flow, and how I like to watch reactions at previous lows and highs on the 1 minute alongside the PPLs. Understand? Now, with gold, it looks like we at least made, no, we didn't make any type of lower wick yet. I thought we at least made a little bit of a lower wick here, but we are still holding above 1803 and starting to create some lower time frame bullish market structure developing here. I still want that lower wick being created on the new hourly candle, or some type of pullback in this area, and then potentially taking the buys. When I'm looking at the price action here on gold, I do not like the price action here, and I'm going to explain to you guys why. For example, when you look at this bullish price action, regardless if it was data or whatever it is, it's very clean cut in terms of you have very strong bullish candles, consecutive bullish candles, and then minor bearish pullbacks. Here, very strong bullish price action, a bit of a consolidation zone and a pullback, but then again, buyers jump back in and very strong bullish price action. You see larger bullish candles, more consecutive bullish candles. The bearish candles that do come into play are weaker. They don't break the overall structure. You can validate the buyer's momentum as you start to ride that on the lower time frame, right? Compared to when you come here, when you're looking at the price action here at the time being in this pullback structure, it's very hard to tell the buyers and sellers strength. You're having buyers candles getting wiped out in a singular period or in the same amount of time. You're having very aggressive ranging and whipsaw movements. So I'm waiting for some cleaner volume to come into gold where we could still possibly get a little bit of a retest or lower wick formed in the next 30-minute candle. Then notice stronger buyers momentum and volatility to take us back into these highs. Right now, over the last maybe 6 to 8 hours during this pullback structure, the buyer's price action has not been as clean compared to when we have strong buyer's momentum, where you don't have to take advantage of this whole play. You can take advantage of a quarter of this range and still catch great scalps in intraday plays as you're playing that momentum. You don't have to be the hero grabbing here. You don't have to be the hero grabbing here. You don't even have to grab here. You could grab well above, breaking above previous zones and still playing that lower time frame momentum. Right now, the price action here is not as clean. It is not as favorable compared to when the previous buyer's momentum and when I show you guys healthier price action stretches, okay? So this shows me that we don't really have the cleanest volume and volatility right now. Yes, we're going up, but we're having very aggressive whipsaw movements. Buyers' upside moves are getting instantly corrected and having these aggressive pullbacks, and it's not the cleanest price action because remember, during our New York sessions here, we are scalping. When you're scalping, you want to be in and out of the markets within minutes, maybe within 15 minutes max. You're in a trade, right? And you're also playing very short pip ranges. You're playing 10, 20, 30 pips. Of course, in the Capital Hungry private channel and myself, I also like to intraday trade where I don't play 10, 20 pip ranges. I like to play 50, 60, 80 pip ranges. And those types of trades might take hours to play out, or swing trades might take hours to days to play out. Scalping is a whole different beast where the price action reading is the same. The market structure identification is the same. Your confirms are the same, but you're adapting to the very lower time frames and smaller ranges. You're going to be in and out of the markets within minutes. You're going to be looking to capitalize on 10, 15, 20 pip ranges. You're going to be looking to trade during a session period. When you're looking at gold, do you really want to be up in profit for 17 pips and then when you look away and go to the washroom, you're already back down to your break even, having you second guess yourself and causing those potential issues? When you're playing these whipsaw movements or you're playing potential ranging such as this, compared to, again, what I'm showing you guys to the left here, where you're having just very clean candles, very strong bullish price action, minor bearish pullbacks that you can see the difference between the bearish pullbacks and the bullish impulsive moves. Very strong impulsive moves, very slow pullback. Very strong impulsive move. This pullback was aggressive but didn't break that previous low. Very low little consolidation, impulsive move. Consolidation, impulsive move. And you take advantage of the stronger volume, volatility, and buyer's momentum, and you identify that with the size of the candles, the consecutive following of the bullish candles, the pullbacks that don't break structure. Compared that to the price action here. Not as clean, right? Very, very weak candles on both sides, up, down, ranging, because here what we had happen is from an intraday high being printed, which is normal, you have a market wave and you have a bit of a consolidation zone and a bit of a pullback phase here, right? The market doesn't always move consecutively to the upside. Here around the hourly time frame, you have this monstrous upside move, then you have this consolidation zone for days, and then you continue back up with the trend with that upside move. The price action reading, whether it's the daily time frame, whether it's the 1 minute time frame, or the 1 hour time frame, the price action reading is the same. Okay? So right now, what I would like to see is if this 30-minute candle in 9 minutes closes nice and bullish, now we're starting to see some buyers' momentum develop. Now we're starting to see a potential breakout of this corrective structure. If the following 30-minute candle gives us a retest of 1803, then we'll start to take buys to target these highs again. But as a scalper, you don't want to trade and put yourself in poor trading conditions. Remember, you have the choice of whether you want to trade or not. Sometimes the best position to have is no position at all. What I've noticed with a lot of scalpers who are inexperienced is they don't trade what they see, and they don't trade what the market gives them. They trade based on hope and what they want out of the market. So for example, somebody might be scalping gold buys in this entire little range here, literally getting burned. Scalping up and down, going up and down 10-15 pips in profit, and trading this ranging market, which will end up burning their account. And then when the impulsive moves come back with the trend, right? Then when the impulsive moves come back with the trend, their account has already got burned. They're already stressed. They've already hit their stop loss so many times that they miss the move. How many of you guys, including myself when I started, and it still happens because we're human and we make mistakes, how many of you guys notice that you get caught trading a range, there's a lot of stress trading that range, and then you'll get taken out playing the scalping it up and down, getting a headache, getting that stress, playing those whipsaws, and then when the real impulsive move happens, you don't even have the energy, you don't even have the analysis, you don't even have the capital anymore to take advantage of those trades because you were fighting this range for 8 hours. Okay? So just keep that in mind, that you want to trade optimal conditions. When the impulse, and when you're trading optimal conditions as a scalper, for example, gold did over 200 plus pips, right? Yesterday. As a scalper, you only need 20-30 pips. You don't have to catch the bottom buys and be a hero. You don't have to play the guessing games as it's impulsively pushing to the upside and play those guessing games, right? You could take advantage of the momentum and movement right after and take advantage of those 20 to 30 pips and be in your scalp and done. Remember, I'm talking to the scalpers during this session, right? I'm not talking to the intraday traders or swing traders. That's a whole different style of trade. I'm a little bit disappointed here. I had a buy limit here that did not get triggered. This fucking buy limit did not get triggered. It was by 1 pip. It's not triggered. This would have been already almost to my take profit halfway on this 30 lot. Buy limit. How did this not get triggered? 17. No way. How did that not get triggered? 17.99. 17.99. We did not top 17.99? Well, I would have already made $15,000 on that trade. No, man, it's probably because of fucking spread. The fucking 2 pip spread. It literally came there on a freaking dime. Okay, my buy limit, right? You guys see it. Price was at $17.99. This was set yesterday. Look at the time down here. Can you guys see that? Its spread was still above. Fucking bullshit, fam. I'm actually a little bit FOMO about that. I'm a little bit disappointed about that. You guys can see the buy time right here was yesterday, the 14th. No, oh, sorry. You guys can't see that bottom order? No, sorry. You guys can see here. No, here. I'm talking about this one. I have 2 buy limits. I have one at 17.95, right? And I have one at I had one at 17.99 right here. Look, right here. These are both buy limits. These are both set yesterday. These are both set yesterday. I'm a little bit fucking disappointed by that. I sort of want to end. Wow. You can see these were set yesterday. Buy limit here, 17.95 and 17.99. Who said I'm not trading gold? I said I'm only trading gold. Actually, the only pair I'm going to be trading is gold. Fucking Raja's getting a message, yo. No, this is with Dominion Markets account I got with Raja. I have both Pacific Union and Dominion Markets. It's all good. It seems like it was just spread. 17.99. Oh my god. If that activated, your boy would have already, because I had a medium term zone here. Remember, like I was telling you guys, I was looking for retests in this area. I had a buy limit set up right here, and I had a buy limit at 17.95. This would have already been 70 pips profit. That would have been a good $20,000 already profit. That sucks. That sucks. Should I delete these now? I don't know if we're going to get a retest. I might as well delete these, I guess. I should have put it to 17.99.2 or something, but it's too late for that now. Yeah, I got major FOMO right here. Look how beautiful this was as well. That buy limit. Look at the... so after we had this breakout yesterday during 3 p.m. Eastern, September 14th, I didn't take orders, but I set buy limits. And I put a buy limit at that zone at 17.99 and a buy limit at 17.95 if we did a deeper pullback with like 20 to 30 pip stop losses on it and targets up to 18.12. Right? You can see we hit that, but with spread, my limit didn't activate, and we're almost up 70 pips from there as well. Yeah, I should have put a bit of a broken number. You're right, Edward. I should have put like I should have put 1795.13 or some shit. You know what I mean? All right. Well, I got FOMO there. GJ, anybody take the impulsive sell scalps on GJ? At least you guys got 10 pip scalps there. I'm going to be looking for a retest of 1803. I don't think we're going to get a retest at 1799. I'm going to look for manual entries at 1803. Yo, listen, I'm a human just like you guys. I think I need to give myself this mental reminder. I got some serious fucking FOMO on gold right now. I got some serious fucking FOMO on gold right now. Texting Raja, saying, "Yo, you gonna pay me for this or?" Yeah, that looks like GJ. What the fuck did GJ just do after bouncing at these lows? What's going on? What did I miss here? Sorry, yo. I was looking at gold and that I'm a little bit disappointed by that gold here. Okay, we just had some economic data come in. It's giving us a potential gold pullback here. Sorry guys. I got distracted with that. I was so, you know how excited I was that I was gonna open this terminal and show you guys, yo, look at this buy limit I got that got activated. I'm like 20,000 in profit right now. And then I saw it, I opened it, didn't even get activated. No, but honestly, I still like Dominion markets more than Pacific Union. I use both because I got different trade styles. Look, for example, I want to do some long-term trading and intraday trading, but I don't suggest you do it on the same accounts because it can get very distracting, right? So, but I do like Dominion markets more than I like Pacific Union, to be honest with you guys. Yo, okay, so CAD inflation on the yearly still going up. This 30-minute candle that just opened up doesn't have an upper wick. I think we're gonna retest around 1804 and still have further buys set up here on gold. We have some short-term US dollar strength coming from the manufacturing index. That's why dollar probably just spiked up here. Dollar just had this little bit of a bounce from these lows because the New York manufacturing data was really good. That's why gold's dropping a bit and doing a pullback, and that's why dollar's pushing up. No, you don't have to deposit with crypto. Just as a Canadian citizen, you have to sign up under the crypto option, but you can still deposit in whatever way you wish. You know what I mean? Yo, it's all good. I'm not too worried. Gold doesn't look like it's going to have any further breakouts because this New York manufacturing data was extremely good. Like way higher than the maximum they expected, way higher than previous, way higher than the pull. It brought some short-term dollar strength and gave us that gold pullback. And I think we're still going to hold 1804 for buy scalps off 1804. And another good thing to help us with gold buys is that global inflation is still going up. Canada's monthly inflation and their yearly inflation is still very high. This is very high inflation for a small economy like Canada at 4%. Like, for example, if you come look at the inflation chart here. No, I'm just playing around. I don't actually, it's all good, yo. I don't actually have FOMO, guys. I'm just playing around. I love using Raj's broker. It is what it is. I've had that happen many times. You know what I mean? No, I didn't. I meant bigger inflation is better for gold. High inflation is not good for the Canadian dollar, but bigger inflation and higher inflation is good for gold because these inflation risks show us that investors might still be pooling money into gold as a precious metal to hedge against those risks. You know what I mean? GJ also did that liquidity grab, and with that manufacturing index data and some headlines from Bank of Japan, those sells were extremely short-lived. So we had 11 pip sells, but now we're breaking above 151, but which was very hectic whipsaw movement. You know what I mean? So it wasn't the best there. Now let's break down some trade ideas we can take advantage of into the next 30 minutes. Now, GJ, we have to still identify something. We still had sellers at least print this low, and we're still respecting structure if we don't break above 0.200. 0.200 is still going to be a high risk, high reward sell area. And also if we break back below 151. All right. GBP USD, we're only taking buys if we come back above 1.38400. Euro USD, we're only taking buys if we come above 1.84. UCAD just did some whipsaw movement on that data. The reason why UCAD is doing this whipsaw movement but should drop in my opinion is because we both had US and Canadian data release at the same time there. Now, stay out of gold for the time being because gold's going to give us, because gold's price action here with that stronger US data is showing us an equal snapback. So what I mean by that is, we had very strong bullish price action here, but it's getting equally mirrored with that US economic data being stronger. So we do have the potential that gold can do deeper pullbacks, then continue back up. So don't enter gold buys yet. I think it's going to be doing a deeper pullback because we have to look at the price action and what the price action tells us about buyers and seller strength. What I don't like, for example, if this pullback and downside move only came to these areas and then started to jump back to the upside, that would be a pullback from the highs. But the fact that we made this upside move, then got instantly snapped back due to the stronger US economic data, is showing us that buyer strength getting faded out and deeper pullbacks now coming into play. Right? So we can see this 30-minute candle getting faded out as well. No, I got rid of the buy limits. I'm going to be looking for manual entries. All right? I still have a buy limit at 17.95. I deleted the 17.99 one. What are you guys talking about? CAD JPY? It's because GJ just did this. GJ just did that same move as well. It's not necessarily because of the CAD data. It's because Japanese yen rejected those highs and is having a bit of an aggressive drop. Is starting to reject there from Bank of Japan headlines as well here with Kuroda speaking. So both like CAD, all JPY pairs did that same move there from the lows being printed. CAD JPY did the same move as GBP JPY. Euro JPY did that same move as well, right? So it's not because of the Canadian economic data, it's because of the Japanese yen impact. Euro JPY, CAD JPY, AUD JPY, they all did that same little bounce and move. You know what I'm saying? It's because of Japanese yen. Everything against a safe haven currency. CHF is a safe haven currency. The safe haven currencies dropped. So you're talking about CAD CHF, right? And that went up like this. Right? CAD CHF did this, right? But also Euro CHF did the same thing as too. Also GBP CHF did the exact same move as well. Remember, the pairs you guys are looking at with the Canadian dollar against, it's against safe haven currencies. Japanese yen and CHF are both safe haven currencies. All the moves against Swiss franc and yen did the same thing. All the currencies against them did the same thing. Right? So CAD JPY, GBP JPY, they're all doing this pretty much same move right now. It's because of Japanese yen weakness coming from the Bank of Japan headlines. Yeah, that's why I said let's be patient with gold and wait, because I can still see buys if we come back above 1803. But and guess what? That hourly candle finally made that lower wick. What I don't like with gold now is how we went back to the same high areas and rejected, but we're still in our bullish bias. I see the new 4-hour candle coming down to these lows and then snapping back above 1803 still. Even if we were to break below here, we're just going to get a deeper pullback and better buy setup. But does that make sense? Everything against the Swiss franc and against the yen went up. It's not just CAD. Does that make sense for you guys? Everything against the Swiss franc, everything against the Japanese yen had the same move right now. Whether it's CAD, AUD, NZD, GBP. They all did the same shit right now. All right, we're only taking buys though if we break above 0.200. Okay, so we're still rejecting the bearish market structure. We're still rejecting 0.200 for the time being. We had a very short-lived sell for about 12 pips scalp, but so we had this very short-lived scalp for about 10 to 11 pips, but then we had some news come in that weakened the Japanese yen and Swiss franc and led to this whipsaw upside move, but we're still respecting bearish market structure after printing this low. Okay, so it was not because of the Canadian data. Everything against the Japanese yen, AUD JPY, NZD JPY, Euro JPY did the same move. Everything against the Swiss franc just did that same move. It's because in the short term, the Japanese yen spiked up to those same highs I was talking about and is already having a pretty aggressive rejection. Okay? I told Raja about the order. I told Raja about the order. He's like, oh, it's like when you have to take a fat shit and it's almost out and then it goes back in. I'm like, bro, what kind of fucking analogies do you think of? Oh, this guy. That's why I love this guy. 1795 is the 50%. So when you're looking at impulsive moves versus corrective moves, we have this very aggressive impulsive move when you're measuring the range of it of almost 270 pips. From that high point, a 50% correction and pullback would roughly be to 1795, which is also a higher time frame key level. So I had both buy limits, and in the first area was this medium term zone at around 1799, 1800. The second buy limit I had was 1795. One, because it's a higher time frame key level and price sensitivity area, and two, because even if we pulled back to 1795, that's still holding bullish market structure. That's still a 50% correction of the impulsive move we had. Do you get what I'm saying there? If you guys enjoy these webinars, if you want me to do them more frequently, do me a favor and turn the Capital Hungry post notifications on. My account on YouTube isn't monetized because I talk about a lot of society stuff. I talk about a lot of rants about how fucked up the economic world is and how corrupt it is. I talk about a lot of touchy subjects, I guess you can say. So my account got demonetized. So whenever I go live, people don't get the notifications for it, even if you're subscribed. So hit that little bell. You know that little fucking golden bell? Hit that little bell next to the subscription button if you're subscribed. And anytime I go live, you'll get a notification. So I don't have to you don't miss anything. You know what I mean? Okay? Also, do me a favor and like the stream. Likes really help spread with the exposure. I don't know how many people we have in here. Probably like 200, 300, 400. If we can get at least like 300 likes, if you guys want to. I don't give a shit if you do. It just helps with the exposure. You know what I mean? No, I have to have a monetized account to do channel. You're talking about YouTube channel memberships? I can't do that. No, I cannot do that. The YouTube channel memberships where people are like, yeah, you can't do that. I can't do that, sorry. Your account has to be through the full monetization process and approved. When you go through monetization, pretty much the YouTube algo. I don't know, like, or I don't know if it's probably like an algorithm. It scans all of your videos. It watches all of your videos and it scans all of your videos for any slander, for any touchy subjects or any, you know what I mean? Also, for your guys' own sake, besides liking and subscribing, make sure you guys follow all the free capital. Oh yeah, this is the little bell I'm talking about here. Click that, subscribe, and click that and like the stream. But for your own education and for your guys' best interest, make sure if you, like for example, I'm just going to be honest, right? A lot of you guys within the YouTube chat, do you guys not think I'm very knowledgeable regarding the markets? Whether it's with fundamentals, technicals, whether it's with scalping, intraday or swing trading. You all think I'm knowledgeable and experienced, correct? Put a 1 in the chat if you think yes. Put a 2 in the chat if you think no. Okay? I just want to see why, like, I just want to see. People are listening to me for a reason, right? Now remember that I am not any different than any of you. Like, I don't have some photographic memory. I don't have some crazy high IQ. I don't have some gifted intelligence. I just put in a crazy amount of time and effort and trial and error into studying the markets. Just like anything you want with success in your life is going to take an immense amount of trial and error. The great thing for all of you is through my trial and error process, through my studying, through my experience, I have pretty much documented it all in the sense with all of these educational webinars on the YouTube page. Right? Let me zoom out here. All of these webinars there's no clickbait. Burning with Burn. Yo, you don't have to delete Burner's messages. Burner's my boy. He's just doing that shit on purpose. Burner's not a real troll. Burner's just my troll. Yeah, you don't have to time out. Don't time out Burner. It's all good. I know you might just think he's a real troll, but he's not. Burner's our boy. But anyways, you have all of these various webinars here. Psychology, technicals, fundamentals. Not a single one of this is clickbait. Not a single one of this is for entertainment or like for a prank video or for advertising. I think I got one video for advertising. The one video I had for advertising is advertising the private channel, which is here. All right. Every single other thing you see here is either full trading session streams, fundamental webinars, technical webinars, analysis, psychology webinars. Oh, I got two advertising webinars, these two, that are just talking about the private channel. Everything else besides those two webinars is straight knowledge and value through my learning process. Okay? So you guys can so for all the people who put a 1 in the chat who think I'm so knowledgeable and experienced, you could get to my level and 10 times more ahead of me if you go put the right time and effort in. Right? It's all about time and effort. and about consistency into developing your craft. And then besides the Capital Hungry YouTube channel, you also have the Capital Hungry Twitter feed here, which a lot of people use. Even Forex Factory, Forex Live, various websites source the Capital Hungry News Twitter. It's not as many headlines. It's not as many headlines to the left here, which is for the private channel members, but it's still there. And you have the Capital Hungry free Telegram analysis channel. Within the free Telegram analysis channel, you can see updates of when I'm going to do live streams. You can see advertisements, analysis, charts, fundamentals, technicals, everything in between. You could go look at trades I've taken, webinars on willpower, everything. Everything's in here, everything. You can even go look at the first post when I was trading penny lots and grinding 2 years ago, going through that trial and error process. You could go click this and go look at that as well. All right. So remember, I'm the same as all of you. I got the same I got the same stupid ass brain in our heads. No, I deleted that buy limit because the price action wasn't good with that US economic data. So I deleted that buy limit there. I only have the 1795 one. Just because we had stronger US economic data with the federal, with that manufacturing index. So no, I removed that. I'm gonna see what the new 4-hour candle in NYSE brings. lucky I deleted that. Yeah, I removed that earlier here. 1795 looks like it might get triggered though. I'm going to be looking for manual entries though for 1795. I'm going to be looking at the 1 minute chart here. The reason why I delete, okay, so I was talking about this earlier describing price action. The reason why I deleted this limit is because, one, we had a fundamental catalyst bring US dollar strength. We had very strong US economic data, right? Two, we had a snapback in price and equal price action canceling out the upside move. And then three, we're going to have higher potential to break below 1799 and do that deeper pullback stage. All right. So when you look at this, as soon as we had this economic data release at 8:30, the New York Fed Manufacturing Index, it was extremely strong economic data. This brought US dollar strength and also decreases the demand of gold as a precious metal safe haven, causing that aggressive pullback. The same time, we had that snapback in price and cancellation of that upside move, and then it showed me we're going to have higher probability of a much deeper pullback, but this was primarily induced due to this economic data here. All right. And then we also had, of course, US dollar strength from that economic data like I was showing you guys earlier. That's why I removed the buy limit at 1799, and now we're gonna watch the reactions here at 1795 accordingly to see if we get some better price action. And look at that first key level tap in reaction as well. Let's see how it goes. What do I think about mentors who say they trade with the bands? Oh, banks? Nobody trades like the banks. The banks trade like the banks. No, I just want to see if we get any exhaustion confirms here at 1795. What I'm essentially looking for is the 4-hour candle to close above bullish, the new 4-hour candle in about 10 minutes to retest 95 and fail to break lower for some double bottom buys off this area. My buy limit should already be 20 pips in profit. I might close that quick. Yo, what? This didn't activate again? I was gonna close this for a quick scalp, yo. The 17.95. No way! That would have been 25 pips profit, $3,000 already. Fucking Raja, you're getting some fucking calls from me. I should have put it up like 10, 1 pip higher. We literally just went up 30 pips from the key level. That would have been $7,000 already. Fuck this, man. Fuck this. I'm gonna come back another day. We literally tapped the key level and went up 30 pips already. It's all good. It's all good. I'm trying to get used to limit orders and I'm trying to get used to limit orders and buy stop orders and stuff like that. I'm gonna come back another day fresh. I'm gonna come back another day fresh. No, Dominion's still my favorite. Yo, listen, I'm just playing around. These limit orders wouldn't have got triggered on any broker with that spread. You know what I mean? No, I removed it now. I'm gonna come back and trade fresh tomorrow. I already had, like, that trade would have played out for 70 pips. This trade would have played out for a quick 30, 40 pips. Yeah, next time I'm gonna do that. Let's see how these 4-hour candles close across the board. Let's see if we still close above let's see if we still close above 17.95 and get the retest. I don't think you know how buy stop works. Buy stop, you have to break through the price. You can't put a buy stop at a lower price. GJ with the Japanese yen weakness and order block we're creating here, if you get 1 minute closures above 0.200, like this new 4-hour candle is going to close pretty bullish. The new 4-hour candle might do something like this, right? If you get the breaks above 0.200, then we're adapting to those buy analysis as well. So the new 4-hour candle is just closing up here. Let's just wait. Gold, I'm out. I deleted my gold orders. It's all good. Things happen. You know what I mean? I'm not here to be emotional about it and cry about it. It is what it is. That is the nature of the beast. Dominion Markets is still my favorite broker choice to use in Canada right now. I've had a few times Pacific Union freeze a couple of times during news and high volatility, but Dominion Markets has stayed solid throughout, so. Okay, so before we close off here, if this new 4-hour candle in NYSE comes down to 17.95 and fails to break, high risk, high reward buys with safer buys above 1803. Only sell gold if you have intraday candle closures below 17.95. Dominion, no, pretty much like the price points are similar, spreads very similar. I've just had Pacific Union freeze during high volatility times before. Dominion, I've never had it freeze yet, or ever had it freeze. Only look for gold sells, guys, if we have any 30-minute, hourly, and 4-hour closures below 17.95 and breaks below 17.95. Otherwise, we're still in the buy bias. We just have to be cautious because obviously that economic data led to this dollar strength here. GJ, new 4-hour candle, just let it make a bit of a lower wick first and fail to break. If it does, then pop back above 0.200 for buy scalps. If we cleanly hold above this liquidity zone and hold above the bearish structure, after having that low printed and snap back in price, we're having stronger bullish price action, a bit of a liquidity zone here. It looks like if we hold above 151.1, we're going to get some GJ potential buys. I would only sell below 151 flat now. GU is just ranging with that indecision on the dollar. Euro USD is just ranging. UCAD is also just ranging here. Very indecisive price action. US 30 also failing to break 34,500 for the time being still. Okay. So, through this stream, we called some potential short-term gold buys above 1803 that were very short-lived, and then we had to summarize what happened. There were some short-term buys above 1803. That was during the initial New York Open, very strong price action. Then at 8:30 a.m. Eastern, we had US and Canada economic data. The US economic data was extremely strong, like well above the surprise point, well above expectations and forecast. This stronger US economic data led to a cancellation of this bullish upside move and also strength in the US dollar. At the same time, you have to understand fundamentally, with strength in the US dollar and stronger US economic data, this decreases gold's demand in the short term as a precious metal safe haven, right? So the buys were very short-lived, but then of course we had stronger US data, a decrease in gold's demand, bearish price action cancel out that move, and we had deeper sells down the ranges here. Gold looks like it can actually dig a bit deeper if it breaks below 1795, just because we know how strong dollar domination has been, and obviously dollar is holding that strength. Okay, does that make sense of what happened with gold through the New York session so far? New York Open held bullish structure, went back to pretty much revisit previous intraday highs. Then we had the US economic data lead to this downside move. We were still rejecting key price points and we weren't in a sell bias. Okay, GBP Jpy. We played short-term sells during initial New York Open below the 0.95 lows, which were for 10 pip scalps, playing the bearish market structure, playing the bearish price action, and a break below the consolidation zone. But then we had Japanese yen news, and overall that stronger economic data led to weakness in the Swiss franc, weakness in the Japanese yen, but strength in the dollar. So you can see that you had this upside move on all Japanese yen pairs. Right now, we're still holding in below 0.200 for that pullback we were talking about, and we haven't broken above for the safer buys yet. So pretty much we had some short-lived buys on gold, now back to 1795, and now some US dollar strength. And we had some short-lived GJ sells, but then quickly snapped back and had some Japanese yen weakness bring us back in the range. We did not touch GU as it's ranging, we did not touch Euro USD as it's ranging, and we did not touch USD CAD as it's ranging. We already understood with the key fundamental points that as we're coming to the end of the quarter, as we're coming and having equity markets in a pullback, US dollar in that same range, Japanese yen in that same range, which I'll show you guys here, that markets have been having very aggressive whipsaw movements, and it's best to be in and out of the markets and take advantage of what you can and come back to attack another day. So we can see here for the extended period of longer than a week, dollar's been in this range between those highs and lows. Japanese yen has been in this range. Volatility index and equity markets have been in a range. Failing to break both highs and lows. So it shows us a lot of indecision where it's hard to validate the strength on our safe haven currencies And it makes sense why we have these aggressive pullbacks on dollar pairs or Japanese yen pairs. Okay? But other than that, everybody, the stream has been running for roughly 2 hours now. I'm going to call it a day here. We got to take advantage of some short-term gold scalps with New York Open above 1803, as well as GJ sells below 151 to almost 0.800 area. Then we had some fundamental news and economic data cause us not to be able to break the ranges on any of these safe haven currencies, which led to an aggressive pullback on gold, aggressive pullback on Japanese yen pairs, led to aggressive ranging on the dollar, and we can see how indecisive the markets are in terms of the buyers and sellers price action, the fundamentals, and the indecision we have there. If anybody has any questions for me, please let me know now. Otherwise, I'm going to be ending this stream as it's been running for roughly 2 hours now, and I got to go do a private session Zoom to continue off. I personally did not take any trades. I had a $800 gold loss last night, and that's it. I had some gold buy limits, one that should have got triggered and got me 70 pips back to the high, but it didn't get triggered, and then I deleted the buy limits because we had stronger US economic data and because we had US dollar strength. It didn't make sense to keep holding into gold buys or hoping we would bounce at those areas because we had fundamental catalysts shift our bias. Okay? So hopefully that makes sense. Please trade accordingly. If you guys want more, make sure you guys go watch the webinars on the Capital Hungry YouTube. Make sure you follow the Capital Hungry Twitter. If you want to join the private channel, signups are still open. In the private channel, we do 5 New York trading session streams a week, Monday to Friday. We do a market update webinar every Asian session. We do a weekly recap webinar every Sunday. They get access to the news terminal. They get access to key level price alerts, session alert reminders, a price monitor, the newsroom and other members' trades and analysis. You get access to the community, trade ideas and outlooks by myself and other experienced members, and everything in between. We do a shit ton. There's way too much that we do in the private channel for me to talk about, all right? You also get access to the Capital Hungry Crypto Newsroom, Banter Chat, Newsroom, Trade Room, main feed. It's a lot of shit going on. But anyways, everybody, thank you for your support. Thank you for watching. I appreciate you guys coming here, listening to the fundamentals and technicals as we traded the New York session. And to be honest, even through my experience, it is a messier session due to that indecision in economic data, as well as the ranging we have on Japanese yen and dollar. We've had some very aggressive whipsaw moves the last couple of weeks, and especially last week where we had so many central bank speakers. It got very messy, right? I will see you guys on Friday. I'll see you guys for the self-development video. Everybody, please take care and have a great day.